Good day, good day, good day. This is TatiaOlds, your real estate matchmaker and advisor. Today I would love to discuss with you the home buying process. And many of you begin that process online. You decide, I'm tired of renting, I'm tired of moving every year trying to get a lower rent. And so you start looking online and maybe you click on a link. Because after you looked at so many properties, you get that inclination to take action. And so you click on a link and a realtor reaches out and you decide to work with them. Or maybe a family member or a friend referred you to an agent. Maybe you know an agent. Maybe you see a video like this and you choose that agent in the video. Anyway. However it is you find an agent, you find an agent. However, you really should not begin your process there. Your process should start with a loan officer, right? A bank, credit union, wherever you decide to go to get a loan. However, if you don't choose that route and you do go the realtor route first, that realtor that you decide to work with definitely has a relationship or should have a relationship with lenders, loan officers, mortgage brokers, and they'll get you taken care of. Refer you a couple of people. And so your next step is you do your application. And when you do your application, let's be clear. Some agents will take you out based on a pre-qual. I've done it. Do I like to do it? No. And I don't choose to do it anymore, because I know the difference, right? And so you think when you get a pre-qualification that you're good to go, and that you wanna get out there and start looking at properties. However, a pre-qualification really is just you doing an application and giving your version of what you look like as far as purchasing a home, where you work, your income. Some people include overtime, and if that overtime you're including as income is not guaranteed overtime, you can't even use it as income. So what happens is the lender takes the information that you gave them and they say, okay, based on this information and the credit pull, right, you can qualify to purchase a home. However, until you provide the documents that support that information that you put on that application, you will not get an approval. So I urge all of my clients to actually complete the application and as soon as possible provide all of the documents that support the information in that application. Once that's given, I ask my lenders, please, can you take them through like a desktop underwriting? We want to make sure as much as we possibly can. Things still happen sometimes and it doesn't work out. However, if you do as much diligence as you can up front, you have less opportunity of disappointing your client. And so I like to do things in that order because everything must be done in proper order, okay? And so now once you get your approval, your agent will be glad to take you out and find yourself a home. The other reason for getting the approval prior to taking someone out to look at homes, because you might have an idea in your mind how much house you want. I've been looking at houses online, at $500,000, and I really saw this one that I like. But once your application gets processed and your supporting documentation gets looked at in underwriting, they may determine you can only purchase, $450,000, and honestly, $10,000, $20,000. It really doesn't make a great difference if you're looking at homes in what that home looks like. If you have to go from looking at $500,000 homes to $450,000 homes, or even $430,000 homes, sometimes it's a really big difference, and it instills disappointment in a client or a customer, and we don't like to do that. So doing things in order, once again, is how we like to move, okay? So once you get out there looking at homes, you put in a loan, not a loan app. You put in your offer, right? You're gonna, and with that offer, you're going to also provide some consideration for that seller taking their home off the market and allow you to do some diligence on that home. And that consideration we call earnest money in the state of Georgia. That earnest money, I typically tell my clients it could be 1% of the sales price of the house, 2% of the sales price of the house, however much you want to provide, whatever you're comfortable with doing, right? Now, that earnest money gets given to the seller within like 2-3 days after going binding, and that's your responsibility to get it to whomever's holding it. Typically in my contracts, I always have the closing attorney hold that earnest money. So it would be the buyer's responsibility to get that money, whether in check, wire, or cash, to that closing attorney, however you say you're going to do it in that contract. Now, you have an opportunity to get that earnest money back in the event that inspection doesn't go well or that appraisal doesn't go well. But time is of the essence, and we must follow the contract guidelines as far as timing is concerned, okay? So if we have 5 days diligence, we have to get an inspection done, and we have to get our amendment to address concerns to that seller or that seller's agent within a timely manner, so that we can determine whether you're going to move forward or kill this contract where it stands, okay? And if you do all of that within that time frame, if you can't come to an agreement with that seller, you get that earnest money back, right? Now, if you decide everything's good, we're going to move forward, then that appraisal gets ordered. And it gets ordered by the lender. And that is also money that will come directly out of your pocket. The inspection and the appraisal, you pay directly to that inspector and to that appraiser. Actually, with the appraisal, you will give the lender your credit card information or debit card, however you choose to pay it, and they pay that appraiser. That is money paid directly to those parties that you do not get back. So if you can't come to terms on an inspection, right, you may have to bow out of that contract, terminate, and start the process all over again, which is why I typically say if you're looking to purchase a home, you need to have anywhere from 7 to 10% reserve in order to purchase a home. Right? You need to have 7 to 10% of the sales price of that home. The down payment is 3.5% if you're using an FHA loan. And your closing cost typically is around the same, 3.5-4% of the sales price of the home. So altogether, 7 to 10%. It varies depending on the lender that's processing the loan and their fees. Okay. With that being said, if the appraisal takes place and the home does not appraise, and the seller doesn't want to reduce that sales price, now you have to determine, do you have enough money, and will your lender even allow you to come to the table with those additional funds because you really want to purchase this house? Or you may say, well, I don't have it, and so we have to terminate this contract. So now that's inspection money and appraisal money that you don't get back, and you have to start that process all over again on the next home. And it happens sometimes. And so this is why we want you to be well prepared for these things, okay? Now, once you're under contract and all of that goes well, you want to start looking for some homeowners insurance. I can typically, as an agent, your agent can refer you to some companies, or you can even reach out to the company who insures your vehicle. You get discounts for having more than one item being insured by that insurance company. So your insurance company would definitely be the first place I would look. However, you never know. There's some other companies that you might be able to get a better deal with. And so once that happens, you get to the closing table. And one other thing, with the homeowner's insurance, say it's $1,500. Some homeowner's insurance will wait and get that money at closing, but others will require you to pay whatever it is you have to pay up front. You will, though, within a matter of 30 to 60 days, generally, receive a check back for your deposit for your homeowner's insurance. Because if you're purchasing a home using a loan, that homeowner's insurance actually comes out of the monthly mortgage payment. And so they send your deposit back to you in the form of a check. What else was I going to say? So you get that back in the form of a check. Oh, and as far as financing concerned, we all know that there's different types of loans, right? You've got FHA, which is 3.5%. You have conventional, which is owner-occupant conventional. You can get a 3% down payment, 5%, 10%, 15%, and you also have that 20% down payment on a conventional, right? And that typically is for investors or people that, have that 20% they can afford to do, and that gets rid of some private mortgage insurance. But those are some things that, you can discuss with your agent or whomever's representing you at the time. And, the down payments differ with it. We also have, 100% financing. You have USDA, which typically you can utilize if you purchase in rural areas. And of course, you have the VA. Our heroes get 100% financing as well. Did I say down payment for the USDA? It's 100% financed, excuse me. No down payment, but doesn't mean that there's no cost at all associated with you closing. It's just minimal compared to all the other loans. All right. And I haven't written any of this down, so excuse me if I'm fumbling. I'm going off the top of my head and trying to give you as much information as I can and as quickly as I can. And so once you've done all of that, you make it to the closing table. You're going to speak with the attorney, the closing attorney. They're going to talk to you about title insurance and things of that nature. They're going to talk to you about if you don't make these payments on time, what's going to happen. But this is a happy day, and we don't even want to hear none of that, right? We just ignore that part, right? But don't make your payments on time, right? So once you sign, you get your keys. Once you sign and bring your money to the table, you're 7 to 10% for down payment, as well as closing costs. You get your keys, and you happy, and you living in your home. So I think I gave you almost all the info. If you have any additional questions, please feel free to reach out to me. TatiaOlds, EXP, your real estate matchmaker advisor. My number is 678-697-5119. That number again is 678-697-5119. I hope this helps some of you understand the home buying process. And if you have any questions, listen, you can inbox me, or you can ask under this post, or you can give me a call. All right. Well, you all have a blessed day. Take care.